Welcome back, future real estate pros. This is part 2 of our National Exam Practice series, and in this video, we're diving into 20 more must-know questions. Each one is here to sharpen your knowledge and boost your confidence for the real estate exam. If you haven't seen part 1 yet, go check it out after this. Now let's jump into question number 1 of part 2. Question number 1. Which of the following loan types is guaranteed by the federal government? A. Conventional loan. B. Adjustable rate mortgage. C. FHA insured loan. D. VA guaranteed loan. The correct answer is D. VA loans are guaranteed by the U.S. Department of Veterans Affairs. This means that if the borrower defaults, the government steps in and pays the lender a portion of the balance. This guarantee helps qualified veterans and active service members access home loans with little or no down payment and competitive terms. Let's review the other choices. A is incorrect because conventional loans are not backed by any government agency. B is just a loan with a changing interest rate, not a loan type that is government guaranteed. C might seem right at first, but FHA loans are insured, not guaranteed, and they are handled by HUD. Question number 2. What is the primary advantage of an FHA insured loan for a borrower? A. No mortgage insurance is required. B. Interest rates are always lower than conventional loans. C. Lower down payment requirements. D. No credit score check is needed. The correct answer is C. FHA loans allow down payments as low as 3.5%. This makes it much easier for buyers with limited savings to purchase a home. These loans are especially helpful for first-time buyers and those with less than perfect credit. Now, let's go through the other answers. A is incorrect because FHA loans do require mortgage insurance. B is not always true. While interest rates can be competitive, they are not guaranteed to be lower. D is wrong because credit scores are still reviewed. Though FHA lenders are more flexible than conventional lenders. Question number 3. A clause in a mortgage that allows the lender to declare the entire loan due immediately upon borrower default is called the O. Acceleration clause. B. Defeasance clause. C. Alienation clause. D. Subordination clause. The correct answer is O. An acceleration clause allows the lender to demand full repayment of the loan if the borrower defaults. Instead of just asking for the missed payment, the lender can require the entire balance to be paid at once. Let's clear up the confusion around the other options. B refers to a defeasance clause, which releases the lien once the loan is paid in full. C describes an alienation clause, which deals with property transfers. D is about lien priority, not default situations. Question number 4. A borrower receives a fixed-rate loan with equal monthly payments that cover both principal and interest. This type of loan is known as a I. Balloon mortgage. B. Straight note. C. Fully amortized loan. D. Interest-only loan. The correct answer is C. A fully amortized loan is one where each payment goes toward both interest and principal. By the end of the loan term, the entire loan is paid off with no large payment at the end. Let's examine the other choices. A is a balloon mortgage, which requires a large lump sum at the end. B refers to a straight note where payments usually cover interest only. D is incorrect because interest-only loans do not pay down the principal until a later time. Question number 5. Which of the following is typically used by borrowers with weak credit and little down payment? A. Conventional fixed-rate loan. B. FHA insured loan. C. Bridge loan. D. Blanket mortgage. The correct answer is B. FHA loans are ideal for buyers who have limited credit history and smaller savings. They are more flexible with approval and require lower down payments, making homeownership more achievable. Let's rule out the other options. A is incorrect because Conventional loans often require higher credit scores and larger down payments. C is used to cover the gap between buying a new home and selling the old one, not for first-time or low-credit buyers. D is used when financing multiple properties in one loan, typically for investors or commercial buyers. Question number 6. A lender considers the loan-to-value ratio primarily to estimate the market value of the property. B. Determine the insurance premium. C. Assess risk and set lending terms. D. Identify closing costs. The correct answer is C. The loan-to-value ratio, or LTV, compares the amount of the loan to the appraised value of the property. Lenders use this ratio to assess risk. A high LTV means the borrower is putting less money down, which increases the lender's risk. That risk may lead to higher interest rates, tighter loan terms, or a requirement for mortgage insurance. Let's review why the other choices are incorrect. A is wrong because the market value is determined through an appraisal, not by the lender using LTV. B is incorrect because insurance premiums are based on property value, coverage type, and borrower profile, not just the loan amount. D is unrelated. Closing costs include fees for appraisal, title, escrow, and more, and are not determined by LTV at all. Question number 7. What is a common feature of an adjustable rate mortgage, or ARM? A. Monthly payments remain fixed. B. Interest rate stays the same for the loan term. C. Interest rate adjusts based on an index. D. There is no amortization schedule. The correct answer is C. ARMs have an interest rate that changes over time based on a benchmark index, such as the LIBOR or SOFR, plus a fixed margin. After an initial fixed-rate period, the interest rate may go up or down, causing the monthly payment to adjust. This allows for potentially lower initial payments, but adds uncertainty in the long term. Now, let's rule out the incorrect options. A is wrong because the whole point of an ARM is that payments may change after the fixed period ends. B describes a fixed-rate loan, not an ARM, which is specifically designed for rate adjustments. D is incorrect because ARMs still have a clear amortization schedule. The balance is still paid off over time, even if the payment amount varies. Question number 8. Which of the following principles is the basis for the sales comparison approach to value? A. Substitution. B. Contribution. C. Highest and best use. D. Anticipation. The correct answer is A. The principle of substitution means that a buyer will not pay more for a property than the cost of a comparable substitute with similar utility. This is the foundation of the sales comparison approach, where appraisers look at recently sold similar homes, adjust for differences, and estimate market value. Here's why the other choices are incorrect. B. Contribution refers to how specific features of a property affect its overall value. For example, adding a bathroom may increase value, but that's not the method used to determine base property value. C. Highest and best use is a separate concept that helps determine how land should be used for maximum value, but it's not part of the comparison approach. D. Anticipation relates to expected future benefits, such as a new school or shopping center nearby, and is usually used in income-based valuation models. Question number 9. An appraiser is estimating value based on the cost to rebuild a structure using modern materials. Which approach is being used? A. Income approach. B. Sales comparison approach. C. Cost approach. D. Capitalization approach. The correct answer is C. The cost approach estimates what it would cost to rebuild the structure from scratch using current materials and labor, subtracts depreciation, then adds land value. This method is most useful for new constructions, or properties that are unique and not often sold, such as schools or fire stations. Let's look at the other options. A. The income approach estimates value based on how much income a property can generate which is not relevant for an owner-occupied or special use building. B is incorrect because the sales comparison approach relies on finding recent comparable sales, which may not be available for a unique structure. D. The capitalization approach is part of the income method and requires rental income data, which would not apply to the situation described in the question. Question number 10. Which method would an appraiser most likely use to value a church? A. Sales comparison approach. B. Income approach. C. Cost approach. D. Gross rent multiplier. The correct answer is C. A church is a specialized property that doesn't generate income and rarely sells, so there are few comparables. That's why appraisers use the cost approach to estimate how much it would cost to build the same structure today, then subtract for depreciation and add the land value. Now let's look at the other options. A is not practical because sales comparison relies on market activity and similar property sales, which are usually not available for churches. B is wrong since churches don't operate to generate rental income, so the income approach isn't applicable. And D, the gross rent multiplier, is a shortcut method to value rental homes or duplexes, and it does not apply to institutional properties like churches. Let's move on to the last half of today's practice questions. Question number 11. Which of the following types of property ownership includes survivorship rights? A. Tenancy in common. B. Joint tenancy. C. Tenancy by the entirety. D. Severalty. The correct answer is B. Joint tenancy includes the right of survivorship. That means when one co-owner dies, their interest automatically passes to the surviving joint tenant or tenants. Without going through probate, this form of ownership is often used by family members or partners who want their ownership interests to transfer directly upon death. Now, let's review the other options. Option A. Tenancy in common does not include survivorship. Each owner's interest passes to their heirs, not the other co-owners. C. Tenancy by the entirety is similar to joint tenancy but applies only to married couples and is not available in every state. D. Severalty means sole ownership by one individual, so survivorship doesn't apply because there are no co-owners involved. Question number 12. Which type of deed provides the greatest protection to the grantee? I. Bargain and sale deed. B. Special warranty deed. C. General warranty deed. D. Quitclaim deed. The correct answer is C. A general warranty deed offers the highest level of protection for the grantee. It guarantees clear title and covers the entire ownership history, not just the time the seller held the property. The grantor promises to defend the title against all claims, even those that arose before they took ownership. Let's look at the others. A provides little to no warranties. It implies the grantor has the right to convey title, but does not guarantee it is free from defects. B only covers defects or claims during the time the grantor owned the property, not before. D offers no warranties at all. A quitclaim deed simply transfers whatever interest the grantor has, if any, and provides no protection to the buyer. Question number 13. What is the purpose of a home inspection contingency in a purchase agreement? A. To determine financing options. B. To provide time to secure insurance. C. To evaluate the condition of the property. D. To verify title history. The correct answer is C. A home inspection contingency gives the buyer the right to have the property inspected for structural or mechanical issues before finalizing the purchase. If major defects are found, the buyer can renegotiate the contract, request repairs, or even cancel the deal without penalty. This clause protects buyers from unexpected and costly surprises. Now for the incorrect options, A is unrelated. Financing options are handled through loan pre-approval and mortgage contingencies, not inspections. B is incorrect because insurance is typically handled closer to closing. and is not tied to the home inspection clause. D is wrong, since title issues are reviewed during the title search and handled through a title contingency, not an inspection. Question number 14. Which of the following events would terminate an agency relationship by operation of law? A. Breach of fiduciary duty. B. Failure to find a buyer. C. Death of the principal. D. Mutual agreement. The correct answer is C. The agency relationship ends automatically by operation of law when the principal dies. There's no contract to enforce once the person granting authority is no longer alive. This also applies to the death of the agent, bankruptcy of either party, or destruction of the property involved. Let's consider the other options. A is incorrect because a breach of duty might end the relationship, but it requires action. It doesn't happen automatically by law. B is wrong because the agency relationship doesn't end just because a buyer hasn't been found. D is incorrect as well. Mutual agreement can end the relationship, but that's voluntary, not automatic. Question number 15. Which of the following is not a fiduciary duty owed by an agent to a client? A. Loyalty. B. Confidentiality. C. Hosting open houses. D. Accounting. The correct answer is C. Hosting open houses is a service an agent may provide, but it is not a fiduciary duty. Fiduciary duties are legal obligations that arise from the agency relationship and include obedience, loyalty, disclosure, confidentiality, accounting, and reasonable care. Let's look at the actual fiduciary duties. A. Loyalty means putting the client's interests above all others, including the agent's own. B. Confidentiality means protecting private client information, even after the transaction ends. D. Accounting involves properly handling client funds and keeping accurate records. All of these are legal responsibilities, unlike open houses, which are simply marketing activities. Question number 16. What is the purpose of the Truth in Lending Act, also known as TILA? A. To regulate mortgage interest rates. B. To prevent loan defaults. C. To enforce fair housing laws. D. To ensure full disclosure of loan terms. The correct answer is D. The Truth in Lending Act requires lenders to clearly disclose the terms and total costs of a loan to consumers. This includes the annual percentage rate, finance charges, payment schedule, and total repayment amount. TILA ensures that borrowers understand what they are agreeing to and allows them to compare offers from different lenders. Let's take a closer look at the wrong options. I is incorrect because interest rates are primarily influenced by the market and federal monetary policy, not by TILA. B is not the purpose of this law. While disclosure might help prevent defaults indirectly, the law's focus is on transparency, not repayment behavior. C is a separate area governed by the Fair Housing Act, not the Truth in Lending Act. Question number 17. Which form of co-ownership allows unequal ownership shares? A. Joint tenancy. B. Tenancy in common. C. Tenancy by the entirety. D. Community property. The correct answer is B. Tenancy in common allows two or more people to own property together in unequal shares. For example, one person might own 60% and the other 40%. Each owner can sell or transfer their share independently, and there is no right of survivorship. Now let's review why the other answers don't fit. A. Joint tenancy requires equal ownership and includes the right of survivorship, which tenancy in common does not. C. Tenancy by the entirety is a special form of ownership for married couples and always involves equal shares. D. Community property is also limited to married couples in certain states and typically treats ownership as equal unless otherwise stated by agreement. Question number 18. B. To set tax rates. C. To control land use and development. D. To assign postal codes. The correct answer is C. Zoning laws exist to regulate how land is used in different areas of a city or county. They separate residential, commercial, industrial, and agricultural uses to promote orderly growth and protect public welfare. Zoning ensures that factories don't end up next to homes, and that neighborhoods are planned with safety and efficiency in mind. Let's look at the other options. A is incorrect because zoning doesn't encourage buying or selling. It restricts how land can be used after it's bought. B is also wrong because tax rates are set by local governments and are separate from zoning classifications. D is unrelated. Postal codes are assigned by the Postal Service and have nothing to do with land use. Question number 19. In real estate financing, what is the role of the secondary mortgage market? A. It approves borrower qualifications. B. It offers government grants. C. It sells homes to investors. D. It purchases loans from primary lenders. The correct answer is D. The secondary mortgage market buys loans that lenders have already made to borrowers. By selling these loans, primary lenders like banks and credit unions get their money back quickly and can make more loans. This system keeps money flowing in the housing market and provides liquidity to lenders. Now let's look at the incorrect answers. A is not accurate. Loan approvals are done by the primary lender during underwriting. B is unrelated because government grants are handled by specific housing programs, not by the secondary market. C is wrong because the secondary market deals with mortgages, not the sale of physical properties. Question number 20. Which of the following is an example of a material fact that must be disclosed? A. Previous listing price. B. Minor paint scratches. C. Foundation problems. D. Seller's motivation. The correct answer is C. Foundation problems are considered material facts because they directly affect the safety, value, and structure of the property. Real estate agents are legally obligated to disclose any known material defects to potential buyers. Failing to disclose this could lead to lawsuits or disciplinary action. Let's explain the other answers. A. The previous listing price is public record, but not a material fact that impacts the buyer's decision. B is incorrect because cosmetic flaws like paint scratches are usually not material unless they indicate a larger issue. D. Seller motivation may be sensitive, but it is not a required disclosure unless it affects the transaction materially, such as legal or financial distress tied to the property. And that wraps up all 20 questions in Part 2 of our National Real Estate Exam Practice. Visit our website Realty License Prep to practice more real estate questions for free. Don't forget to like this video, subscribe to the channel, and we will see you in the next video.